All right, I wanted to create this video. It's a long-awaited video. I get lots and lots of questions on both of these subjects, and they kind of blend very well into each other. So I wanted to create this. It's a much longer video than normal. So I'd encourage you to, take it seriously, shut off your social media, shut off your phone, grab a pen and paper and start to take some notes. But it's really aimed at two different types of people, and I was both of those people. First of all, it's the person that hears about trading and they have this perception that it is a big risk, it's a big gamble, it's gambling, and they think that anyone who goes into trading is mad, right? And you might have that friend who's into trading, and you want to go out for a drink or a meal, and they never come with you. They're always busy. They're in the charts. They've got their head in the charts, and you think, man, you're obsessed with the charts. What are you doing? It's just trading. You're just gambling. You're going to lose all your money. If you're just locked away in your room, you must have an addiction of some sort, and that's the perception you've got of those who go into trading, and you think it's gambling. The second person I want to attract is the person that has got into trading and they've now realized that this is a business. This is a serious business, okay? And it's not gambling. And I want to go through all of the aspects that make up the business, and we're going to go in depth into how to backtest the strategy. So I get lots and lots of questions on how to backtest. Lots of people have got a strategy or a system, they just don't know how to backtest, and that's going to have a massive impact on your trading going forward. So really, it's for those types of people. I've been both of them. Now, the problem is with trading is most people go into the markets and they completely overestimate what's achievable in the first 12 months. They completely overestimate. They come in, how much can I earn on this? How can I, if I've got £2,000, how much can I earn? And they completely overestimate what's achievable, mainly because of a few reasons. One, the way that it's sold, the way that it's advertised, and many companies out there are selling a dream rather than the realities of trading. That, coupled with the fact that human beings naturally want to move away from pain, they want the quickest route to success, and also coupled with the fact that there's tons and tons of companies out there teaching you, they're preaching stuff to you that they don't necessarily do themselves. I promise in this video and in all of our videos that I'm going to only tell you things and teach you things that I've either done or am currently doing. So, there's too many people out there preaching what they're not practicing. I'll only tell you what I practice myself. So they completely overestimate what's achievable, and then they get shot down in flames. And then what they do is they underestimate what's achievable in the next 1 year to 5 years, which has allowed me, since I've been successful at trading, it's allowed me to move my family into our dream home. It's allowed us to have amazing holidays, trade from anywhere in the world as well, and also it's allowed me to have more free time to focus on talking to traders that are getting in, giving them my opinions, my advice based on my own historic experiences, and it's allowed me to teach everything that I've learned as well, which is an amazing feeling. You hear lots of people talk about an edge in the market, and we're going to be going over exactly what it actually means to develop an edge and what it's made up of, because there's many things that allow you to have an edge on the market. It's not just black or white. It's not roulette table. It's a mixture of having setup strategy, going through an IPDE process, pre-market, post-market analysis, journaling your trades, what markets you're going to trade, the time of day and what time frame you're going to trade, paying attention to news events, having a money management strategy, risk management strategy, your routine, your personal routine and your rituals, your pick list of trades that you're looking out for that day, and that really develops and becomes your trade plan, as well as backtesting, which we're going to go through in some detail in this video. And that's when that, combined with having the discipline and the consistency to trade all of that as your plan every day, that is what really develops your edge, and that's what we're going to be going through in this video as well. So just to reiterate, what you can expect from this video, we're going to go through, eliminate the whole risk and gambling piece. We're going to go into how it really is a serious business and how you can backtest. We're going to go in depth into that. And remember, I was one of those people that thought it was gambling, thought it was risky. I wanted to gamble my money. I thought it was a get-rich-quick scheme, and it just isn't. So before we get right into the crux of the video, I just want to share with you some interviews we're going to take about 5 minutes to share with you some interviews from some of the most successful traders, psychologists, doctors, and authors on the trading business around the world, and give you their insight to reinforce that trading is a little bit more than just gambling. So remember, grab a pen and paper. It's going to be a long video. You want to be taking notes on this one. Sit back and I'll see you in just 5 minutes or so.
What does it really take to be a successful trader? What kind of work do you need to put in to make that happen for yourself? Our guest today is Don Miller. He's going to talk to us about that and what it took maybe for him to become a success and the work he went through. Don, thanks for being here.
You're very welcome.
Well, a lot of traders are looking for the ultimate setup or the one black box system they can buy and then be on the road to success. But what does it really take to be a successful trader in terms of the work to put in?
Well, when you think about the fact that especially in the futures industry, the trading is all about a vast transfer of wealth between the vast majority of traders who come and go and lose, and the small minority of traders that consistently figure this out and win. It's very much like poker, where you see the same people at the final table, despite the fact that everybody knows that a full house beats a straight, and etc. And so that really leaves all these intangibles in terms of really what it takes, and it's so much beyond patterns. I think people can learn patterns and learn technical analysis in a very short period of time, and that leaves all of these other intangibles, such as focus, such as discipline, such as sticking to your plan. Those are the aspects where the truly successful traders excel in.
Well, you teach traders around the world, and so I mean, this coming from you you've walked a lot of traders from that initial phase to becoming a successful trader. So what things do they need to do to get on the right track?
Well, I think there's a few basic things that are kind of critical for anyone who wants to expose their markets and expose their money to the markets and control that exposure. One is to truly treat it as a business. We oftentimes hear that, but what does that mean? It means to have a very specific, logical process that you're going to use to expose your money to the market.
Yeah, absolutely. I think you've hit the nail on the head there. I think people are attracted to trading because clearly the money and how much money they can make. Therefore, they focus on probably the first decision they make in the whole trading process, and that's when to enter a trade. I mean, that's the first thing we need to do. Therefore, they focus on that. And I think they ignore other things at their peril. Clearly, a complete trading plan is three things, and there's nothing new here. There's the 3 M's. There's the mindset, the money management, and the method. So many people focus on the method, and they really do ignore money management or the mindset and the psychology. I think a lot of people recognise that the psychology is such an important part of what we do, but they probably don't accept it really as being such a vital part, and they worry about it later, and they focus so much on the method, the entry, the trading system. So my key message is, look, to be successful in trading, doesn't matter who you are, you need to have a trading plan, and that trading plan must suit you. Every single consistently profitable trader out there has a trading plan. It works for them, it's right for them, and they use it every day and they implement it every day, and they're very, very successful doing that. And you ask anyone who's failing, do you have a trading plan? Many will say, not really. Some will say, well, I think I do, but not really sure. The bottom line is, anyone who's successful does have one. Those who don't, generally, the odds are they won't succeed. So that's the reality. It's harsh, but that's the realities of trading.
For us, we call it One Good Trade. I wrote a book called One Good Trade, and in it there are 7 fundamentals that actually go into each trade. So as long as our traders have thought of these 7 fundamentals, whether they've made money or whether they've lost money, we're not really that concerned. Is the process that they went through fundamentally sound?
I think if you were to add on discipline, that you would want to focus on not feeling forced to trade. I know that some people feel that if they're not in the market, they're not making money. And so they feel that pressure and it's undue pressure. A lot of people approach the market and say, you know what, I need to make X number of dollars a day to replace my income, and so they build on that force and put that undue pressure on themselves, you know, to be a profitable trader. And then you start to see trades being forced, low probability trades. You know, your broker's happy, they're making money, but at the end of the day, you know, your profit and loss is probably less than favorable because you forced trades that just weren't there.
In terms of individual psychology of traders, I think that all of us come to the markets with a wonderful goal to make more money than we can get from a treasury bill. But along the way, most of us lose focus and we start trading for entertainment. I think that financial markets are the most entertaining places on the face of this earth. It's like a horse race, card game, chess game, all rolled up in one, and it goes 24/7. You can always find action. And so people who are bored, stressed, hate their lives, they escape into trading and they're immensely entertained by it, but they don't make money. When you want to be entertained, you have to pay. You cannot make money. Successful trading is a little bit boring. And that's why my best advice for somebody who wants to become a cool, calm, disciplined, successful trader is keep written records. I hate keeping written records. I'm bored by written records, but that's what makes me into a serious trader.
You find that successful traders actually write this down before they make that entry into the market or exit, before they establish. They have it clearly defined on paper, so to speak, so they can't, not just in their head where they can change it.
Absolutely. Documented is the best. It gives us something tangible. Here's a piece of paper, you can physically touch it. Here are my guidelines, here are my rules. This is all I need to follow. And if I follow this, I'll be successful. You know, my odds have significantly increased.
Over and over. So when you bugger off to the pub or you sit and watch your favorite TV program, I study charts. I go over the trading day. Just like Tiger Woods, he created a new wave of sincerity about golf. When everyone else hit the clubhouse, he went and worked out. And that created a new kind of momentum within the golf sport. He paved the way for a new kind of mentality. Traders who want to battle it out every single day in the trenches of the markets, they have to be sincere about this. Otherwise, you just open an account and you blow up one after the other.
Al Pacino in Any Given Sunday said that this is a game of inches. And it's the traders that are willing to fight for those inches day by day, hour by hour. Those are the traders that are really going to make it in this business over the long run.
All right, so from that, I hope you can see that it's just a little bit more than, you're not taking my word for it. You know, it's a little bit more than just red or black on the roulette table. It is an actual business. And now I want to get a bit more in detail and show you how you can backtest and the extents that some of the people go to be serious about this business and journal and how to backtest a strategy. You know, as I said, you can learn a strategy in a couple of days. You can learn a strategy in a week. That's not the issue. The issue is implementation, and there's lots of things that make up your trade plan. Backtesting is one of the most important. There's many other things, and later on in the video we're going to be going through a complete mind map of a trader, which you can download for yourself as well. But don't skip to that bit yet. Let's get through this. This is the bit you've all been waiting for. It's how to backtest the strategy. So if you've got Excel, pull that up now. If you've got a pen and paper, make sure you've got that to hand. And we're going to get through how to backtest the strategy right now. So enjoy, and I'll see you shortly.
So backtesting really is the first step to actually treating your trading as a business, because you're not risking any money. You're essentially building out your plan, and this is going to become an essential part of that plan, not just for your performance and your financial return on investment probabilities, but it's also going to be a very important key to the psychology and having the mental strength to be able to execute your plan once you've been through this process. So what I'm going to do is we're going to bring on good old Excel. Okay, we get lots and lots of questions how to backtest, and I'm going to give you the very basics on how to backtest, and I'm going to show you something that could improve your life dramatically by showing you some of the other things that you can put into backtesting as well. So I'm going to bring on good old Excel here. People think that when you're backtesting, it has to be very complicated. I think it's something that holds a lot of people back from starting. They don't know where to start on backtesting. Or if you're not very good with computers or technology, or you don't understand how to use Excel, you really don't have to learn too much here. We're just putting data into cells. So if you know how to type text, you know how to use this spreadsheet. So we're going to build out the fundamental areas we want to pay attention to when backtesting a pair. And I'll tell you that it took me around 20 hours per strategy, per pair, per time frame. And we normally say that you want to go back around 100 trades, get 100 trade sample size, or 5 years, whatever comes first. Okay, so those higher time frames, you're not going to be able to necessarily get 100 trades, but if you go back 5 years, that's more than enough. And if you're on the 60 or below, you're easily going to get 100 trades over a 5-year period. So we're going to make a start then. So the first thing we want to pay attention to is what pair we're going to be looking at. So I'm going to start off by putting the first thing in this item, this column A, and we're going to call that pair. Okay, I'm just going to centralize all this stuff. I'm going to put these in bold across the top just so it's a bit easier for you guys to follow. So the first thing we want to know is the pair. So let's just say the Aussie dollar. And the second thing we want to pay attention to is the time frame. So what time frame are you trading on? 60, 4 hour, 15 minute, 5 minute. Okay, so we've got the pair, the time frame. We then need to know the entry date into the trade, because we want to pay attention to the entry date, because if we ever have to go back and maybe we want to do some tweaking and we have another idea on what we want to pay attention to, we have to go back. If you want to find any of these trades, you're going to want to make sure it's easily you can easily go back and find those trades. So you don't want to do what most people do, is get through all the testing, then want to go back to check something, and you think, oh, I've got to do it all again. So you want to pay attention to the entry date. The next thing we want to pay attention to is the entry time. Okay, so the time of day, because this is really important, because if you're going to be trading, the first thing you want to build your trade plan around is when you can actually trade. Okay, if you're going to be asleep, it's going to be midnight, or it's going to be 2, 3 o'clock in the morning, chances are you're not going to be at your charts. You may be, and that's why it's important to get the entry time, because there's going to be certain times that you aren't able to trade, and you want to make sure that you ignore those trades. Okay, what I did is I tested every single trade that presented itself between the hours of 5 in the morning and 11 o'clock at night, and then I built my trade style around the most profitable time to trade. So I filtered out anything. I mean, swing trading I'll be taking all the time anyway, but the day trading sessions I was able to filter down, and I originally only traded the New York session on the day trading time frames, on the lower time frames. Then I switched over to the London session. But you can actually take, when you're going through your backtesting, you want to pay attention to, I would personally say pay attention to the whole day if you can, and then filter out the most profitable time to trade, or the least profitable times to trade, and then you can really refine your system, and then it allows you to only be at your charts for the times that you know are the most profitable. So you want to pay attention to the entry time for those reasons. Next thing is the entry price. We want to know when we're getting in. Okay, so once we see our setup complete, we want to pay attention to the price we got in, because this is going to start to give us the results, the performance. Okay, so now we've got our entry date, time, and price. What I want to do next is put where our stop loss is going to go. Okay, so stop loss. And then I'm going to put our target price. So our target price. So now we know what pair we're looking at. We're looking at we know what time frame we're looking at, the date that we entered, the time we entered, the price where we got involved, where our stop loss went, and where our target went. And that is really the fundamental information that you need in order to start building up results and start crunching some numbers and build the performance of your system. All right, now there's 3 other things that I want to pay attention to here, and that is, of course, the exit date. So we can easily identify where we exited the trade, how long it went on for, the exit time, and the exit price. Okay, so the exit time is going to be obviously when our stop loss or our target was hit, and the exit price is going to be either the stop loss or the target. Does that make sense? Because it's when you set the trade and you're in the trade, you've entered, it's going to do one of two things. It's going to hit your stop loss or it's going to hit your target. So this is going to be the exit price. And then what we can do down here is we'll create a little, in fact, let's add another column on here, and we'll call this total pips. All right, so we'll call this total pips, and this is essentially going to be a sum of the profits and the losses. All right, so we're gonna make a start now. We're gonna go down on the Aussie dollar, and we're gonna take a look at the Aussie dollar chart. Now, for the purpose of this video, I'm not gonna actually go into a strategy. I'm just gonna make something up at random because there's many different traders watching this, and they all trade different ways. They trade Bollinger Bands, and they trade off of MAs, and they trade flag patterns, wedge patterns, double tops, double bottoms. They trade advanced patterns, you know, trend continuation, counter trend, doji candles. There's all these different types of strategies, thousands of them, right? And the purpose of the video is how to backtest, because it's really easy to get a strategy. Like I say, you can learn a strategy in a week, a couple of days to a week, and it's the backtesting that people struggle with. So I'm going to go through, I'm just going to make up, in fact, in this example, we'll just go through a 3-bar reversal. Okay, so a 3-bar reversal candle formation, which is essentially something like this. It's not something that I trade. We're not going to go through a strategy. That's not the purpose of this video. The purpose of this video is how to backtest and start treating your trading as a business. So this is a 3-bar reversal. We're pushing down. We put in a lower low, lower close, lower low, lower close, and then we put in a higher high, higher close. This is a 3-bar reversal. Very simple. It's a candlestick formation, and we're going to be going through that right now. So as we're pushing down, and remember guys, I don't trade this strategy. This is a strategy that is very effective, I believe, at structure, so highs and lows, but I'm going to be taking any one that we see here just so we can get some results in our spreadsheet and show you guys how to input the data. All right, so we're moving along, and what I would say is when you're backtesting, go back as far as you possibly can. So go back 5 years, and you want to be going through this bar by bar. So the right-hand side of the screen here is where I'm going to be looking to start building up my data. We're pretending that the right-hand side of the screen here is today, right? And we're going to go by bar by bar. So we're going to press right. Okay, and we're going to let this play out in real time like it's a real chart, and we're going to, and that's the best way to start backtesting, because it lets you identify the setups far more easier than trying to look through and siphon through this mess. You're going to miss trades. You're going to miss trades. So until you've built out your RAS, your reticular activating system, by doing it bar by bar, I strongly advise that you don't just try to look at the charts and see the setups you want, because what your eyes are going to do, they're naturally going to only look for the winning trades. They're not going to look at the losing trades, because you're looking for, in this case, what we're looking for is a certain pattern that looks like this, and then it springs out and goes up, or a 3-bar reversal is going to look like this, right? What you're not going to look for is something that does this and then does that. You're going to miss the losing trades. Okay, so we're going to go bar by bar. Very important that you do that. I always say you want to lower your expectations when backtesting. You want to go back and check for the losers. Try and identify the losers more than the winners, because they're going to be harder to spot. So go bar by bar. We're going to go bar. Next day, right, we've got our lower low, lower close, lower low, lower close, and we've got our doji bar here. Okay, so if we get a higher high, higher close here, we've got our 3-bar reversal. Right, and there we are. We've got our 3-bar reversal. Now the strategy, we're just going to make up. Okay, we're going to go an ATR based stop below the low. Right, now remember, this isn't a strategy. I'm making this up as I go along. Right, so we're going to go an ATR below the low. The ATR on this candle is 11 pips, so we're going to go down at 53. Okay, so this is our stop loss down here, and what we're going to do for targets is we're going to double the stop loss. Okay, so if we're entering at we're going to enter next bar market, guys. Okay, so we're going to enter at 75.83, and if our stop loss is 30 pips, we're going to go for a 60 pip move. Okay, so it's going to be a 2-to-1. Very crude. This is a very crude strategy, and it's just going to be the purpose of this video, just to show you how to input the data into the spreadsheet, remember. But we're going to put an ATR-based stop below the low. Obviously, you guys, I'm assuming you've got a strategy and you've got definitive rules of engagement into that strategy. You don't change it up. This is the rules. These rules should be written down. You should be following this like a board game set of instructions, so there's no arguments. Right? Remember, we get Monopoly out every Christmas. There's always an argument about IOUs, and I'm the one to shut that down. So you should have board game rules of instructions. We're going to go ATR-based stop below the low. That we're going to enter at market once we get the completion of the 3-bar reversal candle. So on the close of this candle, I'm going to enter at market. Whatever the stop loss is, we're going to go double for the targets. Okay, so we're going to get a 2-to-1. So we now know, right? We now know we've got our setup. Let's just clean this off. So what we want to do is bring on our spreadsheet here, and we know it's the Aussie dollar. The time frame is going to be 60. The date that we enter is going to be this candle here, which is the 28th of October. So we're going to put 28, 10. This is 2016, okay? 28th of October, if you're in the US, I know you use a different date format, but this is the 28th of October, 2016. The time that we enter is going to be on the open of the next candle, so 11 a.m. 11 a.m., okay? See that? Everyone see that? The bottom right says 10 o'clock, and the next candle will be 11 because we're going to enter at market on the open of the next bar market. Right, and the price that we're going to enter is 0.7583. The stop loss is going to go down at 75.53, 0.7553. And if you didn't know how I did that, let's just bring on the data box again. I'm using NinjaTrader here. Bring on the data box. We've got ATR of 11. It was 11 pips on this candle, okay, the most recent candle. Whatever the most recent candle is, you're going to use the ATR for that. All right, 11 pips. We're going to be down at 75.73. Again, I'm not doing this accurately. I'm just picking off. If you want to round up, it'll be 12 pips, whatever, right? So 11 pips. Going to be 11 pips below the low. That gives us a 30 pip stop. All right, 30 pip stop. And the target price is going to be double. So the target price is going to be at market plus 60. All right, so we're going to be 75.83 plus 60. We're going to be up at 76.43. 76.43 is going to be where our target is. So we'll color this in green. Okay. And I stress again, this is very crude. A very crude example of a strategy. I'm making this up as I go along. We'll put our entry in as well. So our entry is here, purple. Target's green. Stop loss is yellow. We don't really need to thicken that up. Let's put that at 3. And we're in. Okay, next bar market. So let's just bring on our spreadsheet again. Target price is up here at 76.43. So 76.43. Now, we've got the information of where we entered the setup. We've got all that information logged. Now we just have to let the trade play out. So we're just going to go bar by bar again. 1, 2, 3. Oh, almost get stopped out there. Okay, let's see what happens. We may get stopped out, right? We may get stopped out, and we'll put that in the data. So we go bar by bar. And what you want to pay attention to here as well, guys, is one of the mistakes lots of people make is they find setups within setups. Now, in reality, you can see we've got a 3-bar reversal here, a short 3-bar reversal, right? But you wouldn't be able to enter this, would you? Because you're already in a trade. What you don't want to do is count this trade as well, unless obviously you're going to have 2 different accounts. But if in reality, if you're in this trade already, you can't take this trade. So you want to discount this setup here and you just want to carry on with your trade. You're not going to be able to take another trade until this one either hits targets, and there you go, bang, we've hit targets, right? We're now out of this trade and ready to take another trade. So we hit targets at 76.44, and we hit targets on the 30th of October. So we want the 30th of October 2016. And this really is how painful it is, guys. It will get quicker and quicker as you go on. The exit time is actually happened at 4 o'clock in the morning. So 0400. We then exited at the target. So we just we hit targets this case. So we can just copy that and paste that into there. And then the total pips. This is going to be a sum of the pips. So what you can do in here is you just add up the pips or minus the pips if you took a loss, and you just put that value into here. Now you can automate this quite easily. You can put a sum in here that will automatically calculate for you, but I know there's people that are unfamiliar with Excel, and I'm trying to keep this as simple as possible so people can even write this on paper if they haven't even got Excel, right? So we know that the profit in this case was 60 pips. All right, so now we're out of this trade. Let's get on to another one. All right, so we're going to carry on going through the pairs, through this pair, bar by bar, and we're going to try and see if we can see another setup. Now, remember, guys, you probably want to pay attention if you're using a 3-bar reversal or anything like that. Obviously, this is going to be more effective at structure, but just to get some information into our spreadsheet, I'm going through any setup that completes. So we're not paying attention to where the setup completes. And you can see here we've got a 3-bar reversal, right? Lower low, lower low, lower close, and then a higher high, higher close. So let's put this one in. We entered on the 2nd of November in this case. So we've again got the Aussie dollar. We've got the 60-minute time frame, which is this. I would recommend keeping a sheet per strategy, per time frame, per pair, and then at the end what you can do is combine all that information together. So this case we entered on the 2nd of November 2016. We entered we're going to enter at next bar market, which is going to be 10 o'clock at night. All right, so 10 o'clock at night. See how important it is to get that information, because you may not be awake. You may not be able to be at your charts for that, so you might want to disqualify any type of trade setups that don't occur during your actual trading time. So the price on this one, we're going to enter next bar market at 77.60, 0.7660. Okay, the stop loss, of course, is going to go in ATR. So let's bring on our ATR box again. Where's the data box? The most recent ATR is going to be 13 pips. Okay, I'm just going to round down there. 13 pips below 76.49 is going to put us down at 76.36. Okay, so here's our stop loss. Color this in red. Okay, our entry is at this level here. So we can obviously bring on our, you can calculate this or use the ruler tool. If you're a simple guy like me, we'll just bring on the ruler. 24 pips of risk. Okay, so 24 pips of risk. So now we want to enter our stop loss price, which is going to be down here at 76.36, 0.7636, and we've got 24 pips of risk. So that means we want to double that for the target. So we're going to go 48. So our target price is going to be 48 pips above the entry. Now, if we're at 76.60, that means that our target is going to be at 77.08. That gives us 48 pips. So 0.7708 for our target. And now we just watch the trade play out. Okay, so do we win? Do we lose? Let's see. We haven't hit our stop loss yet. Let's just put, before we do that, let's put our target in. So we're at 77.08. Color this in green. Okay, and we just watch it play out now. So we may hit it, we may get stopped out, who knows. Remember, you can't look for any other trades in this zone whilst we're in this trade. Looks like we're consolidating for quite a while. and bang, there you go, right? We're out of the trade. So we may have came out here, depending if you got filled, but we're going to use this candle here. So this is going to be, this candle is going to be on the 6th of November. So the exit date is the 6th November 2016. We came out at what time? Next bar market, so 1900, 7 o'clock in the evening. At what price? We're going to come out at our target price, which was 0.7708. Right, and we know that we had 48 pips of profit. So there you have it. Let's get on to the next one. We'll do one more. We're just going to keep pushing up, pushing up, pushing up. Looks like we're up at the DSR. Oh, we got, right, there you go. We've got a lower, low, lower close. 3-bar reversal here. Okay, we're going to enter at market. So this case, let's bring on our spreadsheet. We're going to go Aussie dollar. I'd like to get a losing trade, really. I'd like to get a losing trade to show you guys. 60-minute time frame. The entry date on this is going to be on the 8th of November. So we're going to go 8th November 2016. What time did we enter this trade? We entered next bar markets. This is going to be midnight. Okay, so let's just go 24 midnight. Okay, we're then looking at the price of 77.41, 0.7741. The stop loss is going to go an ATR above the high. So let's work out what the ATR is. It's going to be quite a high risk, higher risk than normal, this one. So we've got an ATR of 16 pips. We're going to go 16 above the high. So 77.78 plus 16 in 77.94. So our stop loss is going to be up at 94. So I'm going to put a red stop loss line there, and then we're looking at entering at 77.41. Right, that gives us a risk in this case, quite a big risk in this one, of 53 pips. Okay, 53 pips. So we're going to go 106 pips. Okay, just delete these old ones off. We're going to go 106 pips the other way. So if we're at 77.41, we want to be down at 76.35. So 76.35 is going to be where our target is. Now this is a big move. Okay, big move. Right, so we're now in. Have we got our data on here? Let's just check. Right, stop loss is going to be at 77.93. 0.7793. Our target price is going to be right down here at 76.35. 0.7635. And now we just let the trade play out. So let's clear this off. Let's see how we play out on this one. It'd be nice to get a losing trade, just so I can show you guys the quick pain-free trade there. We got I made up this strategy, and perhaps we should do some testing on this. Right, the exit date is on the 9th of November, so 9th, 11th, 2016. At the time of, we exited at 4 o'clock in the morning. So remember, you'd have to leave your trades running in order to stick to this plan. Okay. The exit price was obviously the target price again, so .7635. And we know that we got 106 pips of profit on this one. So there you have it. Now I'm going to see if we can just spot a losing trade. Alright, we're going to get on to the next one then. We're going to look for the next trade setup. So we're going to go bar by bar. You see we're pushing down on this chart here. You can see we've got a lower low, lower close. We've got our doji candle, and then boom, we've got our higher high, high close. We've got our 3-bar reversal set up here. Okay, let's just put in a green arrow there just to identify that candle. That's the signal there. We're going to be entering next bar market. So in this case, we have entered on the Aussie dollar again, right, on the 60, and the day is the 6th of November. So 6th of November 2016, and in this case we're going to enter next bar market, which is going to be at 3 o'clock. So 1500 hours. We're going to be entering at the price of next bar market, so 74.80, 0.7480. Our stop loss is going to go an ATR below the low, so let's bring on our stop loss in our ATR. So we know the ATR is, we're going to say 20 pips here. Okay, 20 pips below the low. 20 pips below the low is going to put us down at 74.40. Let's just draw this in. Let's color this in red as well. 74.40, red for risk. So we know our stop loss is 0.7440. We know our target price is going to be double that. So we need to work out where we're entering. So we're going to be entering at 74.80. We've got a 40 pip risk. So we know our target's going to be 80 pips. Okay, so we're going to put our target up at 80. So we're going to be up at 75.60. All right, so 75.60 is going to be our target. That's going to give us 80 pips of target, right? 80 pips of profit, and then we let it play out. So let's just put in our information. Target price is 0.7560. Now we just let the trade play out. So let's see. Right. Come on, let's see if we can see a losing trade here. Otherwise, I'm going to have to go and test this myself. There we go. We got stopped out. Okay, so in this case, we got stopped out at 74.40. Let's bring on our spreadsheet. We got stopped out on the 17th of November 2016, and we got stopped out at 6 o'clock in the evening, so 1800 hours. Exit price was our stop loss, obviously, so 0.740. And we know that our loss was minus 40 pips. Now what you can do is you can quickly add all these up, right? And that's going to give you the total amount of pips there of profit. Okay, but what this information also tells you is how long you went for a drawdown. So you may find that once you've done all of your testing, you've done 100 trades, you might find that you had 5 or 6 losing trades in a row, and it will tell you what the maximum drawdown was as well in pips, so that then you can work out your position size. Okay, so there's lots and lots of great information, and you can evolve and develop this as detailed as you like. And I'm going to show you the trading. I'm going to show you some of our clients' spreadsheets and how serious they've taken it, treating this as their business. And I'm also going to show you the Trade Empowered spreadsheet in just a minute that calculates your position size and everything for you. It tells you all of your maximum drawdown, and then it also has a feature on there how you can drill down and really plug in all the information and crunch the numbers so that it tells you when the best days, times, months of the year to trade are, dependent on your results. So that is essentially all you need to backtest, guys. It's very, very simple. You want to know your pips, your profit, your P&L. You want to know, I would say you want to know your maximum drawdown, okay, and the number of consistently losing trades in a row, all right, because that's really going to build you up psychologically. If you're in a trade and you take a lot and you take a loss and then you take another loss and then you have another setup and you take another loss, this is what's going to enable you to go back over the trades and go, well, last year I had 5 losing trades in a row. This is perfectly normal. It hurts, but I just need to stick with it because I know I'm one closer to a winning trade and new equity highs in my account. All right, so this is essentially how you backtest, guys. If you've got any questions on this, leave comments in the comment section below, and I'll gladly answer every question down there. So now we've been through the basics of how to backtest. I know many of you are probably thinking, well, how do I really crunch the numbers? How do I get to a position where I know I can easily see what's working, what isn't working, what my max drawdown might be, how to start implementing a money management strategy,
And really the purpose of this video is to show you that it is a business and you should treat it like a business. Therefore, you do want all of that information and you want to start thinking of how you can build that information into a database that's going to allow you to grow as a trader and become more and more profitable. So I'm going to quickly show you the backtesting spreadsheet that we give you as part of the Trader Transformation course. Now this also comes with Constellation, and essentially this does everything for you. And this is a fully comprehensive backtesting spreadsheet, all built out for you. Got all the pip values, whether you're trading a standard lot, mini lot, micro lot, and you've got a complete spreadsheet for you to put your backtesting results, your backtesting data. Now you can see this is based on the cipher pattern here on the Aussie CAD on the 60-minute time frame, and you can see this is about 100 trades of data here. And over the last 5 years, and you can see this gives you the maximum losing streak, the maximum losing trades in a row, and the performance, the win rate of the pattern. It shows you, it gives you a little graph here for how many patterns hit target 1, target 2, target 3, etc. Your errors made, and it really allows you to put as much data as you need into this chart in order to build up that discretion quicker. You know, if you're treating it as a business, you want to pay attention to as much as possible. And the really good thing about this is once you have all this data, you should, if you create this sheet per strategy, per time frame, per pair, then you can combine all of this data into one spreadsheet. And that's when the money management section comes in really handy. This is going to actually tell you your position size, what your position size should be based on how risk averse you are, how aggressive you are as a trader, and it shows you the fixed position size, fixed units, and the money management strategy, the trade empowered money management strategy that's here on the right, which increases your position size when you're doing well and decreases your position size when you're going for a drawdown to protect your capital. Now, you can be just over a 50% trader and have a decent money management strategy and still do extremely well. In fact, most traders that I know are just a little over 50%, and they do extremely well because of the money management strategy. So once you've done all of your back testing, and then you know you've got a profit, you've got an edge on the market, you've got a system that has a positive expectancy, that's when you can come into the money management section and you can start to build out that money management, which is then going to tell you your position size. So here it's telling me to, this is based off of a starting account of £10,000. This is telling me to increase, this is telling me to trade 4 mini lots until I get up to £10,536. Then it's telling me to increase my position size to 5, and then I instantly take a loss there. So it's protecting my capital. We're dropping back down to 4. We hit a win. We're going up to 6, then 7, then 8. We take a loss. We stay at 8. Right? We generate some more profit. We put in a new equity high, we go up to 9, 10, we take a loss, we drop down back down to 8, and all I have to do here is come in, and this sheet will tell me my position size. It tells me what I should be, what position size I should be trading for the money management strategy. It's already built out in here. And then what's really, really cool is the backtesting tune-up. This is where you can come in and really start to treat this as a business. Just like any other business, you're coming in, you're checking the results over the last 5 years here. You can see we can go right into the quarters and start to drill down and see, well, was July profitable at all? You know, what about the days in July where the trades completed? You can see Tuesdays profitable in August, Tuesday in July not profitable, and obviously I've only got one set of data in here, so this isn't, you know, comprehensive, but you can really drill down and see what the most profitable years were. When you might say to yourself, well, do you know what? In August every year, you know, it's about break even, so I'm not going to bother trading in August, this particular strategy. And you can really refine your trading system based on how much work you're willing to put in to the testing, and this sheet does all of that for you. And then obviously there's a trade log where you can actually log every trade that you take going forward. Once you go live, You come in, you're treating this exactly like you're backtesting, like a business. You're putting all your trades in here. You are, logging all of your entry dates, times, everything exactly the same way as you would the backtesting. And then guess what? This becomes your new backtesting. So in the next quarter, or you might do it biannually, and you go through your trading system, and you can use the live tune-up sheet the same way we use the backtesting sheet to then really drill down and make sure that your system is still working in the current market conditions. And it might tell you need to tweak something. You might see that you're taking losses at a certain time of day, certain day of the week, and you may have to tweak your system and adapt based on this live tune-up. So it actually tells you, and you can really spot easily when your strategies are changing and may need adapting. So very, very comprehensive. And this is the Trading Powered spreadsheet. And really, I want to reinforce how serious our clients take this. This is a spreadsheet that one of our clients has developed based on the template of the Trading Powered spreadsheet. So they've taken the Trading Powered spreadsheet, they've completely revamped it, and this is how serious they are. I mean, they've got average winner, average loser, they've got all these columns showing the expected trade, the biggest win streak, the biggest win streak in pips, biggest losing streak, and so on, right? And as we go through this, you can see just how serious that this client has taken it as their business. This is their business. This is why they're not in the pub drinking with you. This is why they're not, this is, why you think they're gambling or you think they're mad. This is how serious they're taking it in the background, because it's just like a business. The beauty with this business is, though, you can actually get the data over the last 5 years, and you know what you can expect going forward. Whereas any other business plan, it's all based on your, hopefully economic conditions. Hopefully you can get the business. Product comes into trend and then it goes out of trend. And if you lose that trend, then you're out of business. This is all black and white stuff. And if you just stick to the plan, you're going to be profitable going forward. So you can see, the lengths that this client's gone to note different target positions, different stop loss levels. We've got what they've taken into account the bias of the underlying trend at the time, because this is an advanced pattern. So they want to go over and pay attention to, was the market bullish? Was it bearish at the time of completion? Does that is that a factor? Do I need to discriminate between my patterns, or do I not? They've got that information there, and then they've also taken into consideration whether the RSI was overbought, oversold. Was it a major structure, higher time frame confirmation? Was there divergence on the RSI, double tops, double bottoms, all that kind of stuff. And they've really taken into account as much information as possible, and they've even put some notes here, such as big sell-off before decompletion, right? So they're paying attention to these notes, so that they can go back and think, well, did this somehow affect the trade setup? Do I need to pay attention to this going forward? And you can see they've got the news releases there as well, so they can go back and they say, well, did NFP affect the pattern? Did the FOMC affect the pattern? We had FOMC out, we had Yellen speaking, right? And it's all the information that you need in order to not have to go back and do all this stuff again. And then it's just crunching the numbers, and I think they've put some graphs in here. So they've got the cipher pattern, and they've got some other information here to tell them how profitable their pattern should be, any tweaks they need to make to put them in the most optimal position for trading this live. So here's another example of one of our clients who created this trend summary. He prints it out every 4 weeks. He fills it in daily by hand. Lives on his trading desk, and he tracks higher time frame trends for each pair. He notes, permitted trade setups by the pair, position sizing, pips and profit, and pairs carried forward. He has he keeps a paper archive of this on a 4 weekly report going back, months and months and months. And he also keeps a printout of the week's Forex calendar for medium and high impact news. All right, that same client then went on to take the Trading Power money management spreadsheet and completely, revamp it, add to it. He wanted to take in as much information when testing as he possibly could. He even paid attention to CTS, what percentage of completion points on a pattern made a difference depending on whether there was a double top at completion, whether there was an equal measured move, an ABCD, whether RSI was overbought. You can see there was tons and tons of information in here, and this is extreme. And the reason I wanted to show you this is because this is how serious people are taking this. This is their business. This is how, if you want to be, as the guy said on Money Show, you want to be in the trenches every day. You need to be sincere about your trading. So I thought I'd share with you some examples of how serious some of the clients are taking it and show you that it's not about gambling. It's not, although it's risky, it is a controlled risk. It is a business. And, it's not just about gambling your money in the markets. All right, so hopefully you can see from that how important backtesting is. Not only is it going to give you black and white data of the performance of your pair, but it's going to give you some invaluable information such as how long are you likely to be in a drawdown for? What was your maximum drawdown? How much did you have to lose in order to endure that new equity high in your account? Because that's going to really have an impact on your trading if you start becoming emotional, if you're not prepared for that. So very, very important stuff there. And we worked out the other day that I'd done almost 900 hours of backtesting on strategies, and many traders have done much, much more than me, but that was what I needed to get off and get to where I wanted to be. I'll never ever be where I want to be, completely. I'll always be adapting, always be learning. You don't just take the system, trade it and go off into the sunset. You need to treat it as a business. Journal your trades, backtest that, crunch the numbers, analyze 6 months, 3 months, quarterly, biannually, annually. At least you want to be going back over your system to ensure that the system's still working. You want to keep verifying it. And 900 hours of backtesting seems like a lot, right? And you don't have to do that much. You can just take one strategy and start once and start on one strategy and just trade that. You don't need to have all the information. Just start, just make a start. And many times, my wife would come in and find me asleep backtesting pairs, and that was a lot of sacrifice. That was a sacrifice. I was on holiday. We went to Spain. That was a valuable family time, and I spent 3 or 4 of the days spending 3 hours in the charts a day backtesting. And I did that because I wanted to trade. It was a must for me. I wanted the financial independence. So hopefully you can see that it's not so much about gambling now. Those of you who thought it was about gambling, it's risky, you can see it's much more about being a business, just like any other business. And these pairs, once you've backtested, they become your employees. You're interviewing the pairs. I like to see them as my employees. I've been a business owner. I know that when you're backtesting, it's like an interview for an employee. Do your due diligence? Does it work well in this condition? Does it work well in that condition? And these employees, these pairs become your employees, and you know where their weaknesses are, where they perform better, when they like to take a holiday, right? When they don't perform so well. And you get to really understand that trading is a true business. So what I'm going to do now is we're going to go through, because we've been through the backtesting, I'm going to go a bit more into what else makes up your trade plan and how you develop the edge on the market, because an edge is made up of many, many other things, not just backtesting. So I went over in a bit of, I skimmed over this at the beginning, but I just want to go through a bit more detail in each of the aspects that build up your edge on the market. And I'm going to allude to a trader mind map, which is enormously comprehensive, and Jason Stapleton's going to run through a video for those of you who are interested in getting your copy of that mind map downloaded. You can check out the links below. But we're talking about a market edge. So the market edge, your edge on the market, is built up of lots and lots of different aspects. And the first thing we're going to talk about is a setup. So the setup would be your strategy, if you like, your rules of engagement. You have defined rules of engagement into a certain setup. That becomes your strategy. So your strategy is, you're looking for that certain setup to complete at a certain time, to give you a certain signal, and you've got rules of engagement where your entries go, your stops go, and your targets go. And that all comes from doing your IPDE. We call this Identify, Predict, Decide, Execute. This is essentially your bird's eye view analysis of the market. So you're identifying which way you're looking to get in, whether you're looking to buy, whether you're looking to sell. You're drilling down. You're looking you're deciding how to get involved. You're checking your setups to see if any of those rules of engagement are met, and if they are, then you execute the trade. There's also pre-market analysis. So this is a sort of analysis you want to carry out before your trading session, following the day before, to see if anything's setting up, what your bias is on the trends in any markets. And there's also post-market analysis, which is really reviewing the tape. So once your trading session's over, you review what you did. You build discretion the best way like this. You're looking at what played out. If market reversed just before you thought it reversed, is there any clue there or anything you can build into your discretion to tweak? Was there an even handle number that market respected and created structure and bounced off of, or you saw a rally or a relief? And you pay attention to that in your post-market analysis. What could you have done better? What did you do? And you journal your trades, and that brings us on to journaling. Journaling is obviously what we've been over, and you understand the importance of journaling your trades. You also need to know which markets you're going to trade. So maybe based on your back testing, which markets are you going to trade? Some might be profitable, some might not be based on your strategy and your setups. You might find that some markets are more profitable than others. Some aren't even worth trading. What markets are you going to trade? And then what time of the day? Again, based on your back testing, what is the most profitable time of day for you to trade? Are you able to be in front of your charts all day? Do you swing trade or do you day trade? When are you able to trade and what time of the day? And then there's the time frames. So do you trade off the lower time frames, 5 minute, 15 minute? Do you trade off the 60-minute time frames or the 4 hour, which will give you much more time and freedom away from the charts? Do you even trade off the dailies or maybe even the weeklies? Maybe you're more of a swing trader and you trade off the higher time frames. And then there's news events you want to pay attention to. You saw that one of the clients built all the news events into their backtesting spreadsheet. Do you stay out of the markets during non-farm Friday? Are there certain high impact news releases that you stay out of the markets for or you want to be mindful of? You have those written down. You want to have those written down in your trade plan. Then that brings us on to money management. Money management is really how to protect your capital and how to increase your position size when you're doing well and you're going for those winning streaks, and how to protect your capital when you're going for a drawdown. And then there's risk management. How much risk do you have on any one trade? What about if you're in multiple markets, multiple trades at once? Do you risk 1% of your account? Do you have a fixed position size? How do you manage the risk on each trade? And then there's your routine. This includes things like, in what order do you do things? Is there certain times, are there certain rituals? Is there certain times that you don't trade? What if you have if you're not very well, or you've had a family incident, a death in the family, or you're not quite there in the head? What if you had a power cut or your broadband fails? How do you handle those situations? That all wants to be defined, as well as your pick list. So once you've done all of this, you've got your pick list of your trades that you're looking at for the day. This all becomes part of your trade plan, but it's all of these different aspects, and this isn't it. I'm going to show you the trader's mind map. This is just a summary, and all of this inside having the ability to have the discipline and the consistency to come in every day and trade this, regardless if you're going for a winning streak or a drawdown. The glue of that is what creates your edge, and that's what gives you the edge in the market. Okay, so having the discipline and being consistent to consistently do this
every single day, every time you approach the markets, that's what's going to give you the edge. Not tweaking your system, not taking profits early, not moving your stop loss away, not losing a trade and then revenge trading or trying to force a trade. It's sticking to your plan to the point, right? And then journaling your trades, retweaking if necessary, using that data that you've collected in your backtesting spreadsheet. So what I'm going to show you now is a comprehensive trader's mind map. This is something that we created a while back and has been very, very popular with traders. I like to print this out. It's a place to start. It looks very comprehensive, but Jason Stapleton's going to go through this bit by bit and go through the entire map. And it really is all of the elements that make up a trader's mind. Okay, so we've got the trade plan, the before phase, during phase, after phase, psychology, and the money management. And Jason's going to go through all of these. You can actually download this. You can get your hands on this if you just click the link below this video. It's going to take you to a page and you can download this for free. So I'm not going to go through it now. If you want that, it's there. But I just wanted to open your eyes on, you know, the extent of what a trader goes through in their trading business.
All right, so you know, you can download that mind map below. There's a link below where you can download the entire mind map. There's also a video explaining through that mind map by Jason Stapleton as well. But hopefully you can see, you know, the edge on the market is created of many, many things. It's not just thinking you know what the market's going to do. There's lots and lots of different ingredients which create your trade plan, and then it's the glue that glues that together is having the discipline to come in and consistently stick to all those ingredients every single day in the same order. That's what gives you an edge on the market. Now, how do you know, you might be one of the people in a position that's, you know, you're going into trading seriously. You know that you understand now that it is a business, and you've got people around you that are telling you, oh, come on, you know, you're mad for getting into trading. You know, it's risky, it's gambling. You know, you need to just either avoid those people while you go in, because they're really going to have an effect on your limiting beliefs. They're going to keep you, they're going to hold you back. Or just explain to them, you know, look, listen, just give me 12 months. If it doesn't work, then fine. You can laugh at me all you like, but I'm just going to go in. Please respect that, and don't be negative about it. And I remember losing, you know, I walked away from many people who told me that I was mad, I was gambling. I actually went into trading with another colleague. They said they were going to do it as well. I said I was going to do it. They didn't. I did. And, you know, that caused some conflict as well. But now they want to know. They want to know how I did it. They want to know, you know, because there's such a contrast now. They want to know. They now want to know how I did it. So just remember, if there are people around you, and remember I'm talking to two people here, if there's the people around you telling you you're mad, please just tell them to respect your space until you make it work or don't work, right? Until you give up. Remember, you only fail at something when you give up. And then for the people that are, who do think people are mad for going into it, hopefully I've opened your eyes at the extent that's involved in this business, and you can see that it's not risky. It is risky, but it's controlled risk. It's not gambling. It is a business, except it's a business that can provide you with an enormous amount of freedom, wealth, and financial independence. So the next problem is how do you get around people? You know, that if you have got negative people around you, how do you get around people? Because I don't know many traders. Not many people know many traders. It's not a well-known thing. It's a lonely game. So I'd recommend getting around people. You know, get around. Maybe come and try one of the live rooms. Get in the syndicate. Get on the social media around Trade Empowered. Surround yourself with that community. They're all like-minded individuals with the same goal to generate consistent profits out of the market. There's no negativity. Everyone's building each other up. And remember, the power of that community. You don't want to underestimate the power of a community. Just like any network in business, quickest way to grow your net worth is to have a network. And what I mean by that is, if you've got a question, you're on the same path as someone else, chances are someone else in that network or that community has already been through a pain, or they know the answer to a question that you don't then have to go through and then spend that time learning the hard way and find out that something doesn't work. You know, you could ask a question, someone will answer it, you've got the answer. You don't need to go. You can really shortcut success by being part of a network. And also, you know, education, you know, get educated. If you've got any money, you know, before you start to plow that into trading accounts, put it into your education first. You have to learn first. I know I always say this, but I know someone who goes around the golf range every year. He spends tens of thousands of pounds on golf equipment every year. Very expensive sport, but he never pays for coaching, so his game remains the same every single year. He doesn't get better at. He gets marginally better at golf because of the amount he plays, but he doesn't improve his swing. He doesn't improve the putt. He's literally just spending money on equipment and not getting better. So to me, it's just blowing your money. Get educated and get around like-minded people. So that's it for the video, guys. Hopefully you've enjoyed this. If you came into the video thinking it was about gambling, now I've opened your eyes. If you've got a friend that's into trading and you thought they were gambling, hopefully you can see that they're really taking it seriously as a business, or hopefully they are. And if you're that trader that was just getting into trading, you thought it was a bit sort of, you're one of those overestimating what's achievable in the first 12 months, you can really see what it's about now, and how in depth some of these serious traders are really taking this as their business. So if you've got any questions or queries on this, please leave a message below. I would love to do more of these longer videos, longer training videos, but I need your feedback. So put some questions below, and also share this with as many people as possible, because this is for both of those people. It's for the people that think it's risky and gambling, and it's for the people that are traders and they're not quite where they want to be. So share it around with everyone. It will be valuable for everyone. And of course, lastly, if you're interested in taking your trading seriously and taking it to the next level, there's links below for the courses that we teach. The Ultimate Trader Transformation course is obviously our flagship course. That is a lifetime program where you get to work with us every single day, and I highly recommend it. But if not, then there's the other courses below, the FX Basics if you're brand new, or if you want to come into the syndicate, it's $1 for a whole month. You got 2 weeks of the live room as well for free. That means you can come into the syndicate, and a week in the New York session live room, a week in the London session live room, and that's 6 weeks of immersion for $1. That is a no-brainer. So until next time, guys, I look forward to working with you soon. Take care, and I'll see you then.